Hey everyone, it's Evan here from The Trade Risk on Friday, February 9th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So before we get into anything, I think we should just stop, take a deep breath, congratulate yourselves for getting through this week. It was a long week. It was a roller coaster of a week. And especially if you were a new trader, if you're someone that just started getting active in markets over the past 12 months or so, or even year and a half, this is probably the first real change of character, the volatility event that you've seen or been experienced to. And adapting to the market environment we were in even last month or 2 weeks ago, frankly, is very different, and it came about very fast. And we saw, spikes in volatility. We're going to talk about all that stuff in this video, but congratulate yourselves for getting through it. And if you survived, that's the important part. If you made some mistakes, if you have some regrets there, take a step away from the screens for a day or so, come back at the tail end of this weekend, review what worked, review what didn't, what can you improve, make that list, do those adjustments. And I think this was probably a tough week for most people, just getting adapted and getting, on pace with such faster markets and wider ranges. So if you're struggling this week, you're not alone, and if you're still in the game, you're still watching, then that's what's important, and hopefully you can tidy up that strategy or risk management, whatever it is, going into the future. So let's get into markets here now. A lot of things happening this week. We got the S&P 500 that tagged the 200 period simple moving average, first time since 2016, and on the way down to the 200 period SMA, this ended up just coming out to be the highest volume week we've seen since 2015. So lots of shares trading hands here as we really started to mix things up and get a little bit of panic in the air this week. At the lows on Friday, we retraced approximately 78 days of trading. So of that calm, just grind higher uptrend for the past 4 or so months, we retraced 78 trading days in about a week or two. So pretty quick stairs up, elevator down. And we saw the VIX spike over 100% this week. It didn't close at the highs, didn't close up 100%. It was up around 70%, I think, by the close on Friday. But still, what we can see from that is just a lot of complacency beforehand and just a lot of protection, people seeking protection as this market really started to unravel and pick up to the downside. So plenty to talk about. Let's get into it right now. Our weekend market recap video. Stick around. All right, let's kick things off here with the S&P 500, the SPY ETF, and we're going right to the weekly chart this week to kick off the video here. You can see we closed down 14 points. That's 5% here in the SPY ETF. And we look at just this candle itself, look at the massive range that we covered this week in comparison to really the last several months, all of 2017 trading. Take a look at this tiny kind of bodied candles going all the way up in this nice uptrend, and then take a look at the elevator that the market took down in just the past 2 or so weeks. So we see the expansion in range. We take a look here at the volume, just an incredible amount of shares trading hands, 1.3 billion shares. Going to go all the way back to 2015 summertime since we saw a week with such explosive volume. And when we look here at this longer term picture, you can see I've got this channel drawn here since the start of 2016, and you can refine this to make it fit a little bit better or as you see it, but generally speaking, a nice just kind of visual guide of how we've been trading over the past couple of years. And when we take a look right here from the January-February low of 2016, when we had one of the worst starts to a market ever back in 2016, you can see that kicked off this nice long uptrend that we've been in for such a long time. We got nice and frothy over here towards the end of the year and beginning of January as we accelerated through the top end of this channel. Then we came crashing back down. We did get as low as around 253 this week, and then we found this bounce where we did not quite close on the lows. We closed off off of them by about 8 or 9 points above the bottom end of this channel here, but still below the 20-period EMA on the weekly chart. This is the first close below the 20-period EMA since 2016 back here. Oh, I'm sorry, 2016, right around election time in November. So it's been quite a long time since we've closed below this yellow or orange moving average line on my chart, 20 period, but we did hold on to the lower bounds of this channel. So finally now, longer term sort of participants, trend followers think they're getting tested this week. We saw the 200 period SMA get tested, tagged just barely here on Friday. We have this long-term trend line here. So longer term moving averages starting to come into play now, longer term trend lines starting to come into play. So if you now have some strategy on a multi-month sort of positional basis, now you probably are under a little pressure to make some decisions if necessary. Of course, everybody's strategy is different, but you can see looking at this weekly chart, below, more follow through below this week's lows, or if we continue to hold below 260 or so, we start to get some meaningful follow through below 260, we have a much larger pullback in the works off of a longer term sort of trend where we'd really start to be breaking down and doing some more damage. So definitely with the lows that we have basically in front of us, right around 10 or so percent off the highs, 10 to 12% off the highs, I think, as we start to get any lower, if we start to, hang out and trade below 260 in the S&P 500, we spend a lot of time under there. I think that does not bode well for the future. That said, we do see plenty of signs that say that we've seen some good capitulation and maybe a short-term bottom is in. We talked about this on Tuesday. That clearly did not manifest itself. So let's dial it back here just a little bit, recap this week looking at a daily chart. And when we look at a daily chart, Monday is where we just came through and really saw this stage get set here for some panic to really develop and for some selling pressure to accelerate. We opened with this gap down, tried to fill the gap just briefly here on Monday, and then we basically just sold off entirely into the close. Very heavy day of selling, 4% down. It started really Sunday night with some of those futures. We could see that going on. Came in Monday and then just saw the weakness, the selling accelerate, close on the lows here, and that paved the way for Tuesday to start with a sizable gap lower, but we got a meaningful reversal here. In fact, we opened right around 259 or so, and we saw a move all the way back up to 268. And on Tuesday, I put out a post. We talked about this. We did a Tuesday midweek video, so we went into depth on this, so I won't go too in depth right now, but we put out a post as well saying, look, the selling at this point was only about 4 or 5 days long, but the selling was intense. When we looked at market internals, when we looked at some different metrics, we were very, extremely oversold on many different indicators. Look at the McClellan oscillator, look at the percentage of stocks, above a simple fast moving average. All of those indicators were hitting multi-year sort of extreme levels that indicate that, well, maybe, we've seen enough selling, we've seen enough of a washout in the short term, and this can typically lead to a multi-day bounce. I know we, personally in our strategy tried to put on some longs here on Tuesday on this nice reversal, looking for like a 2 to 3 day move back up into some of these moving averages, looking for that bounce. And what we really saw was about an hour or so long continuation on Wednesday morning where we had this tail up here. We started to rally up to about 272 or so, added a few more points on to the reversal on Tuesday, and that was basically all the bulls could muster up. So I know for us, trying to play for a tactical bounce here, putting on a little exposure on Tuesday, completely did not work. We did not get that follow through, ended up stopping ourselves out on all of those positions by trading on Thursday when we came kind of hammering back down towards these lows, basically getting a confirmation of Wednesday's reversal, and then the sellers just taking very much control back in this market, heading back towards lows, which paved the way for Friday's session, which again we saw a gap that actually was a little bit to the upside, but we saw this nice kind of move all the way back down to 253 or so intraday, only to see it reversed into the close and close positive again. So a complete seesaw, a roller coaster of a week. We closed off of the lows. We tagged the 200 period SMA, put a ton of volume in, exceeded a 10% pullback, broke a bunch of records in terms of the VIX, seeing the largest one-day move in the VIX, blowing up inverse ETFs of volatility, and it was, you know, a pretty spectacular week for headlines and breaking some records after such a cool, calm, collected market for so long. So as it stands right now, where are we? How do we navigate this market going forward? I mean, one thing is for sure, I mean, plenty of technical damage here, particularly on the daily chart to speak of. So that should be concerning. It is a elevated risk environment. That's the way I like to look at it. There's elevated risk holding positions overnight right now with volatility so high and ranges so wide. You know, basically at this point, markets could open up 2% higher, 2% lower, and I think that's would be normal for Mondays, you know, come Sunday futures open. You know, it wouldn't really surprise me to see that type of move in this type of environment, because we have changed from what we were previously in over the past couple of months. So back to some actionable levels. I think the lows here from today, of course, very, very important, 253 or so. We saw about a 9-point bounce reversal back into the close. We do still have very extreme readings across a lot of different indicators and metrics. So market internals, once again, still in extreme territory. There's lots of reason to believe that, or there's enough evidence out there to suggest that a short-term bottom is in, but there's clearly no way of knowing that for sure. When markets really start to unravel in this type of fashion, you have to be cautious trying to pick that exact bottom. If you're going to play for some reversals, you know, you got to do it with, you know, consideration on your position size, your outstanding risk, because, you know, more negative catalysts, more negative news flow, and all of a sudden this market that's already on sort of eggshells right now can easily start to really waterfall and capitulate more and more people, as this is the first real pullback we've seen in over a year. So you know, don't underestimate the power for this market to capitulate. I think there's real risks here, so you got to be cautious. I think in the short term, you can play, you know, again, I wouldn't be surprised to see off of this reversal that we do get a, you know, maybe a 2 or 3 day bounce to start off next week to retest this 268 level. But again, I don't know how high, you know, high probability I would put that on. I could make a good case in sort of both camps that there's more to go to the downside, and we should be bouncing right now. I think all in all, you have to be cautious, have some more cash or have some protection, as the way I see it anyway, especially if you're short-term sort of swing trader. And I think we just want to pay attention to these lows. I think when we look at an hourly chart, which because this market's so fast here and these ranges are wide, maybe it makes a little more sense to look at some of these intraday charts, but take a look at the moving averages here. They're still bearishly aligned on the hourly chart. We're still making lower lows and lower highs. Probably still would have liked to see more volume come in here on the right end of this, even though I guess, you know, this was definitely the high volume kind of day here on the 6th, but I'd like to see some more volume come in. Again, these moving averages need to be turned around. Maybe, again, like I said, mentioned just a minute ago, we make a couple of day attempt to kind of rally back up to this 270 zone where we just failed, and then maybe we start to chop around in this 15-point range in the S&P 500 for the next week or two. Doesn't have to be a binary V shape or just a complete capitulation. We could see some wide chop in here, and that would, you know, that would keep, I think, a lot of the short-term swing traders maybe at bay as we start to really get, you know, wide ranges with lots of back and forth in here. So I think that's pretty much everything. You know, I think I would end it with, remember, you don't need to trade, right? You can take the week off. You can take 2 weeks off. If this is not the environment for you, because as I will remind you one more time, this is not the environment we had last month. And if you like this nice, quiet, calm, collected market that just grinds higher in a lower volatility state, that's not this, and you're going to have to let this either settle out for, you know, at least another week or two minimum, probably longer, to repair this type of damage, and sit on your hands, and that might be the best course of action, rather than trying to push buttons here and trying to fit a strategy that worked in this environment into this environment. So I think that's everything. There's probably some other things. I know there's lots I wanted to cover, but let's see if we let's see if I can remember anything else as we move along. So let's look at the IWM next. You can see here up, nice reversal, 91 basis points. Saw basically same kind of mood here today, where we saw basically a slightly higher open, followed by a large range to the downside, followed by that reversal into the close. Good volume coming in, testing 145 now. So if we go to the weekly chart here, you can see we're down 4.5%, closed below the 20-period EMA, closing right at this prior point, which was a breakout, a big breakout in September above this chop that we saw for almost 3/4 of 2017. We got this nice breakout. We retested it, undercut it this week. We saw a bounce off of it, holding the lows here from November of 2017. So you can see the IWM respecting a bit here some of this prior structure and support where dip buyers stepped in back at end of 2017 around 145. We want to see that level hold going forward. Call it 145, 144.50 or so, right around this November low, and then the highs here from July. I think that would be a great spot if the bulls can step in and hold, contain the selling to what we've seen. If we start to roll over from here, again, I think it just gets kind of worse and worse with more supply kind of getting buried above the IWM. But if we look at that weekly chart again, you can see, we've been in this uptrend. Let's see if we can draw this here from the beginning of January at approximately this slope, and you can see the S&P 500 kind of closing above that trend line from the beginning of 2016, the IWM closing slightly underneath it. So from a relative basis, maybe a little more pessimistic here in the IWM, so something to be cautious of, that small caps getting a little more a little more selling coming through, or a little more structural damage there on the bigger time frame. If we go to the NASDAQ, you can see here 1.73% turnaround, getting a undercut of this 152 level where we chopped around for the end of 2017, getting a nice reversal off of that level. Good volume coming in. When we look at the weekly chart here, we try and stretch this back from the beginning of 2016, see we're gonna have a little bit of a difficult time. You probably have to extend this back from July here, as we really started to move on a slightly different, faster trajectory since the June period here in 2016. But you can see we are holding above this general support, this trend line that has been encompassing price and the slope of this rally on the weekly chart. You see we're closing above it. That's constructive. Let's stay above it would be the ideal scenario for the bulls to contain the damage above 152, which coincides with this horizontal support. So I think there's a lot at play right in here, right around this 150 to 152 area for the Qs to hold on to. If we start to meaningfully break below that, again, more concern I would have from even a longer term sort of structural basis. So that's the market environment overall. I think volatility for the near term seems to be here to stay. Expect those larger ranges. You don't have to trade every day. And I think you're going to see some back and forth action, that day traders paradise as far as ranges go. Shorter term swing traders got to be a little more selective because of that overnight risk is certainly elevated. So lots of thoughts there to hopefully think about. Hopefully that was helpful for you. Let's get into some other markets here. We'll go to TLT, which saw nothing but selling this week as well, 1.37% to the downside. High volume, continuation selling from last week's breakdown. We talked about the significant move below 123 here. We could make a good case that this is very, kind of oversold and good to rebound here, but rates right now are certainly on the rise. They are just screaming higher right now, putting pressure basically across the whole curve, and TLT is not immune to it. So TLT still seeing some pressure here. Volume lightened up a little bit here towards the end of the week, but you have this level back here right around 116 or so. Seems very plausible that we tag this over the next week or so, even though we are stretched to the downside. I'd say this is a pretty good marker for this market to maybe bounce against. If we saw an extreme gap down or some type of selling come the beginning of the week, maybe you get a tactical bounce off of this 116, 117 area. So something to pay attention to. Gold is next. We saw gold sell off this week, 1.28%, so not tremendously damaged here this week, but still not doing too much, kind of tightened up here over the past couple of days of trading, right around this 124.50 level. This is basically where we chopped around right at the beginning of the year here and found a little bit of a stutter step, some support and Buyer stepping in right at the beginning of 2018. I like gold here. I'm watching it, paying attention to it. I like it in this general area, waiting to see if some type of signal can really occur here from my type of style and strategy. And it would be to the long side if we start to see some signal there. Not quite anything that I see that's super exciting right now for GLD, but give it maybe this week or so, might be something there that I'd be looking at. When we think about silver here, you could see this one, more pessimistic at this point, considering it's lost this upper level support. It's more damaged here in the short term, so I'm not as excited about silver. I was excited in here, tried to play it in here. In fact, did play it in here and took a small loss as we were trying to see if it could make a continuation above 16.25. It never happened. Basically, it's been sort of in the penalty box waiting for it to set back up again, but I don't see anything in the near future there for silver. If we go to oil next, USO, you can see had a very difficult week here, 9% to the downside. This thing has been very steady to the upside. It's tacked on a lot of gains over the past weeks. It's covered a lot of ground, and you're finally starting to see some unwind, heavy volume coming in, and you're starting to finally get a breakdown of most trend lines here that you could extend from the mid to late 2017 levels. So I think in the short term, you got to be cautious, maybe a bit oversold. If you're tactical, you could probably play around there, but for now, let the dust settle a little bit. Let's see if a higher low gets put in. Maybe you can play that for a trade once it sets back up a little bit later on this week. And then when we look at natural gas, pretty much falling apart here as well. We're looking to see if it could hold on to this 23 level. That would have been ideal to kind of form a higher low in here to have the bulls defend, but you can see it is starting to slip back down, getting very close to these lows here. If it gets any further, even arguably right now, you'd probably just expect a retest of the December lows at this point. So natural gas, we're looking for it to hold in here originally. Doesn't look like it's doing it. There's no trade right now. It is oversold. For tactical, maybe you find some action there, but structurally not seeing a whole lot until it at least reclaims back above 23 or so, 23.25. I think then it gets at least mildly interesting. So that I think covers all the major markets. Let's take a look here what we got for sectors. We'll go to biotech first, actually, which definitely saw some damage this week, 5% to the downside. But when we look at this on a weekly chart, you can see it is still actually holding above very well, still above, say, this trend line or this, it depends how you want to draw it again, right? But from the start of 2016 or so, I know the slopes kind of changed character a little bit, had this brief break in October, but more or less, price has been trading at this, above this trend line, and you can see we basically came right down and tagged it, didn't pierce right through it like the S&P 500, like we looked at earlier, closed above the 20 period and still, still above the 20 period, below the 8 period EMA. But when we look here at the daily chart, you can see this is a pretty big reversal today, closed in positive territory, and you can see not as much sort of structural longer term damage in XBI here, which is just the equal weighted biotech. You could look at IBB, which has definitely got a different look to it. This is going to be weighted to more of the larger cap biotech, but take a look here at the lows of today, tagging perfectly and bouncing right around this 101 level, which was the lows from November, August. Found plenty of support right in this general area that is held. We tagged it, reversed sharply. We look at the weekly picture here. It's definitely got a little bit of a change of character or a different sort of formation going on here, but this 101 level is important. It's holding so far. So biotech seems to stand out here as they get a very clean sort of retest of the lower end of ranges. I think that's sort of interesting. SMH. So here is, here's another pretty good example here of semiconductors. And you can see they're actually holding on to this level of support right back here from December of 2017. You could also look at the SOXX, this slightly different makeup and weighting for the semiconductors. But you can see it's holding right at this December low here. And we got a nice bounce off it, kind of an undercut move up and a nice reversal, 2.88% on Friday. This actually is a new position we put on here on Friday. It's the only long position we have on right now is a long semiconductors trade, just to get a little exposure in this market, virtually all cash with this one sort of long position, playing it via SOXL. So we do have some long exposure here. We're looking for these lows of December to basically hold in and look for some mean reversion back up to the upper end of this range. That's a trade that we have on right now, the only trade. But semiconductors look pretty interesting. And then I'd say, you know, the staples as maybe they should. You can see here, again, longer term, when you look at this weekly chart, still plenty of damage here, but kind of getting back towards the end of this lower end of the range here. And you can see if it can try and hold in here. It's definitely a little messier. I don't look at this as anything really actionable, but you can see that reversal, close positive. And, you know, maybe this is mildly interesting, although, you know, the more I look at it, I actually don't like the staples all that much either here. So, that, I think, is all I wanted to highlight there. I think on the downside, the only thing I want to highlight is XLE, which just got completely obliterated this week. We look at the weekly chart of energy here. It was 8% down this week, and it was almost 6.5% last week. So this thing is down 14% already, and given back, you know, the majority, even at the lows here, gave it back, you know, nearly 70% of this very sharp kind of V-shaped rally off of basically the August 2017 lows. So XLE really unwound here, did a lot of damage. When we look at this daily chart, it's certainly stretched, maybe some mean reversion in the short term, but once again, we're looking at the $70 level that we looked at way back here at the end of December, beginning of January, and you can see, you know, with you know, this general area here, as long as we're below there and we're below these declining moving averages now, I think it's just in the penalty box. Maybe you play for a bounce into that 70 level. I'd probably rather be a seller into there rather than a buyer at this point. Definitely some good damage going on in energy. I think that's a standout to the downside. So I think that's it. I'm not going to go into any others because they're all, you know, they're all pretty ugly right now, trading in line and highly correlated with the market. So maybe we'll revisit that a little bit closer next week. This video's gone pretty long, so if you got through it, congratulations just for getting through this video. Hopefully you guys you know, hopefully you made it through this week okay. No regrets. Again, like at the top of the video, get you know, get that trade journal out, review your strategy, review what went right, what went wrong, what you can fix going forward, and what you did right. You know, keep that confidence up, see what good decisions you did make, and you know, stay in the game, focus on that risk, and I think respect the changing market environment. Lots of different thoughts there, but just sort of a sign-off ramble. So thanks so much. If you like the videos, do subscribe to our YouTube channel. Tuesdays, Fridays, do these videos. I think that's it. So thanks so much for watching. Talk to you again next week.